Every once in a while, we stumble onto something that's really important in our podcast. So I want to make sure you guys got this little clip I want to share here in this video.
Can I have a Roth IRA and a Roth 401k?
Heck yes, you can.
At any income level?
Yeah. We'll see what happens to the backdoor Roth IRA with legislation, but yeah, any income level. The Roth 401k, so if you're doing the solo K and you're just doing the employee Roth contributions, there's no income restriction on that. Whereas IRAs make you do this little backdoor shuffle for if you're high income. So on the Roth, you get to go in the front door on the Roth accounts for the Roth 401k.
Okay, now, if we go to strategy 4, if we're on our sequence here, you're single, you've done the 401k, you may have the matching out at work, you're doing your solo 401k as well as your individual Roth IRA. Now, I think we get to the partner strategy. So if you're married, we can go to another level and add the spouse to the 401k. What are our restrictions there or thoughts, Matt? What do you think?
So first, does your spouse work? So your spouse may have a job at an existing 401k that they're putting into. And let's say that's happening. And this could even be you too. It's just to think this through. And let's say that your spouse put in 10 grand at the 401k where they work, but you're like, wow, we want to throw more in. We got more we can save. We want to build these accounts. Maybe we're doing traditional. We're chasing tax deductions for year end, trying to save. All right, let's add your spouse onto payroll in the small business because they got to be an employee. A lot of times we don't like adding a spouse onto payroll in your small business unless they're really working in it and we want to make 401k contributions. A lot of clients are like, should I add my spouse onto payroll to get Social Security and all this? No, it's not worth it. Don't chase that. But to make 401k contributions, yeah. Let's say your spouse had put in 10 at the company 401k. All right, come over here in the solo K. We can do another 9.5 of employee contributions and another 38,500 in company match on the employer side. So there's a lot of options in adding a spouse over. Now, if your spouse isn't working, you don't need to worry about that subtraction of what they've done at their day job 401k. You just start at 19.5, of course.
Let's say okay, guys, I've been doing it. I've set up my solo 401k or I've been doing the matching out. I've got my spouse on payroll or not. I've been funding the 401k. Guys, I'm loving the Roth idea. I'm getting on more and more on board on the fact I never want to pay tax again on my investments inside my 401k. Roth conversions inside your 401k have to also be completed paperwork-wise by December 31st. So if you're thinking of doing a Roth conversion, there's no income limit. It's all good. You can do conversions all day long, but you are going to pay tax on some of that conversion. What's some math people need to worry about there when they start doing conversions or timing? Any suggestions on that conversion?
On traditional to Roth within the 401k.
Correct.
I mean, just the biggest issue is you're just going to have tax. So like how much you want to convert, just know you're going to have tax. Now, if you just put traditional contributions in, because sometimes we have that, clients will just throw in some traditional contributions because the company does the match, and the match from the company are traditional dollars because the company takes an expense for it. But we're going to convert that to Roth, which means you pick it back up into income. So those two wash out because you took a deduction, but then you had to pick it back in income to convert it. Let's say you set up a solo K and you have other retirement accounts. You can roll those funds into the solo K, a traditional IRA that's been sitting out there somewhere else, an old employer 401k. I can roll that in. If these are traditional dollars I get into the solo K, I can convert them over to Roth, but I pay the tax on the amount I'm converting over.
Let's say you're under age 50. You put in $19,500 in your solo 401k as a Roth contribution. Well, on top of that, you could do an after-tax contribution to the traditional portion of the 401k. It's a very unique strategy. You'll want to understand it, get a consultation with the lawyers or your accountant before you do it. It's in your solo 401k binder, but you could make that contribution and then turn around and convert it to Roth, and there's no tax. That allows us to start opening the door to what we call the mega backdoor Roth.
Yeah. So the only thing I would add is that takes some gymnastics. So when Mark says talk to your attorney accountant, you're going to have to engage your accountant. This is all going to happen on your tax return. What happens is when you do the after-tax contribution, let's say you're an S Corp, that's got to be on your W-2. That's got to get recorded on your W-2 as an employee after-tax contribution. And then when you convert it, there's got to be a 1099. Now, we know there's no tax on it, but this all stuff has to happen in order for this to work. So now I got a 1099-R, and if you're doing it at directed, we have a form for this, that we have a custodial account here where we're holding your money. Pick this up and throw it in your solo K account here as an after-tax contribution, which you're immediately electing to convert to Roth. So now it's just regular Roth 401k dollars, just like the rest of your Roth 401k that you have. But we're going to send you a 1099. Now, I've had clients be like, why do you send me a 1099? Because I have to. You have to pick it up on your 1040 and say that the taxable amount from the 1099-R is zero because it was an after-tax contribution. They didn't take a deduction on. And they're going to look and make sure it was on your W-2. And so this stuff all has to loop. So just know there's some mechanics to it. And a lot of solo K clients are kind of do-it-yourselfers, and they do their own taxes. And we're not doing this piece for you. This is a little sophisticated. If you're going this route and you haven't used an accountant before, it's probably time you start having an accountant do your tax return.
Yeah.
So make sure this is getting done right.
I love it.
There's a lot to learn on this topic, but the next place I want you to go to learn more about building wealth is this video here.